and Australia. And under that, you have the Guidance Financial Group LLC, which has other subsidiaries, and of those subsidiaries, Guidance Residential is one of them. And Guidance Residential, the home financing company, that's us. We are currently licensed in, I know it says 30 states, but as of now, we are licensed in 34 states and counting. So if you're looking to finance, purchase, refinance, or cash out, or refinance in any of these 34 states, inshallah, we are here to help. These are the Sharia board scholars. Okay, it is led by Justice Muhammad Taqi Uthmani. He's one of the most respected scholars when it comes to Islamic finance. And he's also formerly one of the Chief Justices of the Supreme Court in Pakistan. And he's also a very respected scholar in the Hanafi. And these are some of the, just a bio of some of the scholars that are on our Sharia board. And you can find all of this on our website, by the way. I'm going to run through them because I know, we have a limited time. All of these things that I'm kind of skipping over, you can find them online. This is the fatwa from our Sharia board. And they're all on our website if you want to read in details. And this is the resolution from the UMJA committee from 2014. Basically, of the 5 or 6 major players that are there in Islamic home financing market in the USA, UMJA has favored Guidance Residential's model as the most authentic out of all of them, and they have approved our model. And again, this is also on our website. In fact, I'm going to request, if you don't mind, so it's much of what I'm going to say is actually in this booklet that I'm going to hand out. Okay, so what is riba or what is interest? Riba, interest, to put it very simply, it's to lend money and expect the money back. On top of that, you ask for interest or more than what you have lent. And money, it has no intrinsic value, as we all know. But what is permissible is trade, buy and sell, or partnerships. So that is the route that Guidance Residential has went. So to simply put it, there are 3, there are more than this, but primarily for our purpose here, there's 3 modes of financing. One is murabaha, which is purchase and sell. Like suppose, just for example, on the back, I buy a house for you and I sell it to you for a markup price. That would be murabaha, buy and sell. Then you have musharaka, which is partnership or co-ownership. And then you have ijara, or lease to own. So for the purpose of the American market, our scholars have determined that musharaka model is the most feasible and the most Sharia compliant way to proceed. And so our model is based on the musharaka model. And you can break down musharaka into 2 different category, one for business venture and one for asset ownership, and that's called shikatul milk, and that's the one that Guidance has. And I mean, you may ask, what is the benefit of me going with Guidance versus any other conventional bank? So here is a few important benefits. Number one, there's a capped late payment fee of $50. You suppose you're late to make a payment. There's just a capped fee of $50 that goes into the collection of that missed payment. A conventional bank, they would not only charge you a late fee, but they would also charge interest on the missed payment. Number two, we have a non-recourse commitment, meaning that in the event that you default on your mortgage, we will not go after you to obtain your other assets, like go after your car or any other asset that you may have to recoup the loss. Number three, we share some risks. A bank, their goal is to minimize or eliminate all risks involved. Their goal is just lend you the money and get that money back with interest. They will not share any other risk. As for guidance, we will share some risks with you, and that shows that we're authentic and a co-ownership company. So what are those risks that we share? For example, if you were to lose the property to a natural disaster or an eminent domain where the government is forcing you to sell the house at a loss, in those instances, we will share the loss with you. And in the case of a conventional bank, they will not share the loss with you. Also, there is no prepayment penalty. If you decide to pay off your mortgage as soon as possible, there is no prepayment penalty. And of course, we have the approval of one of the strongest Sharia. So how does our model work? Just to very quickly run through it. So what does a bank do? The bank, they lend you the money to buy the house, and they don't care about the house. They just want to see that if you qualify to pay back the loan. But guidance, so suppose you want to buy a house for the sake of argument, in Cherry Hill, average home prices, Morshad will tell you, probably going for around $400,000, $500,000 right now. Suppose you find something for $500,000 and you want to put $100,000 down. What guidance will do is we will put down the remainder of the $400,000 and buy the property with you. We're not lending you any money. There is no lending involved here at all. So now we are partners in this property. We are co-owners in this property. So you close with us, you start making the monthly payments. Divide the monthly payments into two parts. First part is that you are going to buy out the share that guidance has. And second part is the profit that you're paying us for the part of the property that you don't own yet. Or think of it as rent, if you want to oversimplify it. And as you make more and more monthly payments, your share increases, our share decreases. Eventually, you become full owner of the property. We will have no share in the property anymore. So that's in a nutshell how our program works. It's basically just co-ownership, and you are basically buying out our share. And we in Guidance have no plan to occupy the property as co-owners. It is simply solely for your enjoyment. We're coming in as a financing partner. So without any, inshallah, we will have plenty of time for Q&A. Just to kind of, give you an idea of what I'm sure you guys are all wondering, how do I qualify for your program? So what are our requirements? I just want to kind of quickly go through it. Our requirement is very simple. If you have the income, if you have a good credit history, we can pre-qualify you. Okay. And if you're looking to buy a house or refinance your property, what is your income? If you're on W-2, great. Okay, let's talk. If you have a stable source of income and if you have a good history, let's talk. And I'm sure Morshad will touch on this very quickly. That the market is very competitive right now. And you really want to go out there with a pre-approval letter on hand. And I'm sure if you go to Morshad before anyone else, the first question he's going to die to ask you is, do you have a pre-approval? Okay? You really don't want to go out there without a pre-approval letter. And that's when you come to me, let's talk. And inshallah, we'll go through your financial details, look through your credit, and if you qualify, we'll give you the pre-approval letter within 24 hours if you have all the assets. Okay, so without any further ado, I would like to welcome to the front Morshad. He's with eXp Realty, one of the top producers in the South Jersey area. Inshallah, we'll give you a little bit of information on the conditions of the real estate market, and also what are some things that you need to be cognizant of.
Hey, assalamu alaikum. How's everyone doing? Good? Okay. You know, a lot of people have been asking me, how do you become a real estate agent? Usually it's very easy. You have to take the 75-hour course and you become a real estate agent. But I'm recommending everyone, they get a degree in psychology. Because when you work with a real estate agent, they become your psychologist. They become your full-time psychiatrist. Believe me, when you go to buy a house, it's not just as easy as I'm going to put down a down payment, I'm going to find a house, and that's it. It gets mind-numbing, it gets crazy, and halfway through you're like, I don't want to do this, I want to go back to where I was. And then that's when your agent has to become a psychiatrist and say, listen man, it's okay, don't worry, the world doesn't hate you, we all love you, we can get past this, all right? Some of my past clients are sitting here, so they know how crazy home buying is. But that's why we are here to help you be that guiding light for you and be your psychiatrist for free, all right? Even though I don't have a degree in psychology. But just to introduce myself, I have been doing this for about 5 years now, alhamdulillah. We have completed over 350 real estate transactions in the last 5 years. We're licensed in both Jersey and PA. All of Jersey, some parts of PA, because PA is not as nice as Jersey. That's why we pay such high taxes. I'm also a broker associate and a team leader. We'll explain what that means in a little bit. But what everyone wants to know is, are we in a bubble? Is this market going to eventually crash? Because look at last year. Well, let's kind of take a step back. Pre-COVID, 2019, early 2020, market prices, if you had a home that was going for $250, that home right now is selling for $325, right? So exponential appreciation. So everyone is asking right now, especially the IT guys. I don't know what it is with these IT guys. Every IT guy is like, my friend in IT is telling me don't buy. Because my friend in IT did so much research and he's saying it's gonna crash. All my IT friends have not bought and now they're kicking themselves because the home prices are too high. Well, that's what you get for listening to your IT friend, right? So I'm sorry to all the IT guys. But we are not in a bubble, and we will explain why we are not in a bubble. To simply put, it's a lack of supply. When you have a lot of people who want something, and there's not enough of it, there's supply and demand. So there's a lot of demand, a lot of people who want homes, but there aren't many homes to meet that demand. Therefore, the home prices are going up. How do we know this? Because you put a home on the market and it's priced correctly, you will see that there are over 10, 15, 20 offers, and it's very, very competitive. Competitive to the point where I have seen people come in with cash. Homes are on the market for 400, you have people coming in at cash for 450, 475. That's how competitive it is, because again, there's just nothing on the market right now. And therefore, that's number one reason why we can safely say we are not in a bubble. Number two, why we can say we're safely not in a bubble is because, as you can speak to the financing guys, it is pretty difficult to get approved. In the sense where it's simple, if you hand over the documents, it's simple if you meet the qualifications, but the guidelines are still stringent and very strict. Unlike 2005, we have all these uncles who bought their homes in 2005, and I get on the phone with them, and they're like arguing with me. Well, I bought my home in 2005, and I work in a diner, and I make 15,000 a year. Why can't my son get approved? Well, it's not the same anymore, right? And that's another reason why we're not in a bubble. Because back in 2005, if there were loan officers who were working in 2005, they'll tell you, as long as you knew how to sign your name, you could get a mortgage. Right now, it's not that simple, all right? So that's the second reason why we can safely assume that the housing market is not going to collapse. And then number three is the housing market just collapsed literally a decade ago. That is still very, very fresh in everyone's memory. And the government, regardless of who's in power, they're going to try their best to ensure that the economy does not collapse, right? And that's another reason why the Feds are kind of raising the rates, so on and so forth. But the point in case is we are not in a bubble, and therefore, please, if you are looking to buy a home, don't expect the market to crash, and that's when you're going to come in. Because if the market does crash, believe me, it's going to be harder for you to find financing, unless you have cash. If you're an investor and you have like $500,000 saved up, that's going to be a perfect opportunity for you. But if you're a normal home buyer and you're waiting for the market to crash, believe me, when the market does crash, the bank is not going to want to give you a loan because people are losing their jobs. The economy is unstable, and the bank is not going to want to lend, right? So you're going to be in a bad position. Now, we can go through a lot of what the different experts have to say. I'll just quickly read this. Conditions today are quite different than in the early 2000s, particularly in terms of credit availability. The current climb in house prices instead reflects strong demand amid tight supply. Again, it's because of that tight supply, that strong demand and tight supply, along with record low rates. And right now the rates are kind of going up, but historically they're still very low. Right now, if you're hovering around 4, back in 2018, if you could get it under 5, you would consider yourself lucky, right? In 2018, when I purchased my home, and I used Islamic financing as well, I got 4.7 something, and I'm like, wow, alhamdulillah, I didn't get 5. Right now, you get it at 4, and you're like, oh my gosh, it's such a bad rate. Historically, the rates are still very low, all right? Another thing we'll mention over here, and these are all, not me, I'm just a psychiatrist. These are actual economists, right? The housing market is in line with fundamentals as interest rates. I know they're saying interest rates, but for the purpose of our discussion here, we are, using Islamic financing, are attractive and income are high due to fiscal stimulus, making debt servicing relatively affordable and allowing buyers to qualify for larger mortgages. In short, underwriting standards are still strong. So there is little risk of a bubble developing. And this is the key part. Underwriting guidelines are still very, very strong. What that means is you go under contract, you better have all your bank statements, you better have all your employment, everything ready, because the underwriter is going to want to check it not once, not twice, 5 times maybe, right? Depending on how they feel. They will check it. And if they see anything in your bank statement that doesn't make them happy, they will come after you. That's how strict it is. And again, it's just to go and show you that they're not just throwing away money and giving money to anyone and everyone like it was back in 2005. Because the entire idea is the bank makes money when they lend money to you, but they don't want to lend it to you if they suspect that you cannot afford to pay them back, right? So that's the entire thing. So we're going to pass this over here, experts weigh in. Again, just a very nice breakdown of 2008 versus 2021. I know we're in 2022, but it's just been a few weeks. So 2008, homeowners were turning their homes into ATM machines. In other words, they were buying their homes, and not only were they buying, not only were they, most of them not qualified properly, but also they were refinancing their home. Till now, I know people who bought their homes back in 2006, 7, and they just refinanced, they pulled out the equity of their home numerous times. And now what they owe on the home is more than what the value of the home is, right? So the homeowners turn their homes into ATM machines. Wave of cash out refinances, right? Again, they were just pulling out equity. Homeowners were left with no equity. That's the biggest thing, right? Back in 2008, people were homeowners, but there was zero value to that home. They may have owned a home that was worth $250,000, but the amount of loans that they pulled out on those homes, the HELOCs, was probably $350,000, right? Oh, and it's just so crazy. Right now in 2021, it's very different, where 38% of owner-occupied housing units are owned free and clear. So that's almost like 40%. 40% of people own their homes free and clear. So even if the market tanks, they can sell their home because they don't have anything to pay off. Almost 90% of all homes have at least 50% equity. Why is that important? If the housing market crashes, if home values drop by 20%, number one, the free and clear guys don't have anything to worry about because they don't have a mortgage to pay off if they want to sell. Number two, the rest of the people who have 50% equity, again, they still have 30% equity left if the home values come down by 20%. And then you have more than almost 60% of American homeowners who have at least 50% equity. All this is just driving home the point that this is still a good time to buy, and don't expect the market to come collapsing anytime soon. Right? Don't listen to your IT friends, please. All right. Now this was last year, second half of this year, right? But it still stands true because mortgage rates will likely increase, but remain relatively low. And we're seeing that now, right? Rates are kind of going up, but historically, they're still low. Home prices will continue to rise, but at a slower pace. So that's what we're expecting this year. This year, we're expecting home prices to continue rising, but maybe not as high as or fast as they were rising last year. Last year, I think it was like almost a 19% increase in appreciation, which is a lot. This year, it's not going to be that. This year, it's probably going to be about maybe 6-7% or around there, right? But the average here is they are saying like around 9%, which isn't bad, right? More homes are expected to go up on the market for sale. So that's another thing, right? So the reason why it's not going to be as competitive as last year because there are going to be more homes this year, inshallah, right? So we're all hoping for that because it is getting tough, right? Working with buyers, trying to find a home is getting very tough because there's just nothing out there. And when we do find something, it gets very competitive, right? But inshallah, this year we are expecting more homes. I was speaking to one of my buyers yesterday, and she said, well, what does the seller want? And I explained to her, it's not about what the seller wants anymore. It's about the 10 other people that are going to give the seller $25,000 above asking, right? So we got to keep in mind who our competition is and then put our best foot forward. Now over here, future projections for 2025, right? As you can see, expected rate appreciation through 2025. So 2021, you had a almost 9% appreciation rate. 2025, 5. So it's going to slowly decrease, but over here, as you can see, it's not going down, all right? And what does that mean? That means that if you bought your home in 2021 for $350, in 2022, it can go up to $380, right? Now, these are not hard numbers, not solid. This is just on average. So the point is, why are you going to wait when you can buy now and capitalize on the appreciation that's expected over the next 5 years? Because if you're in 2022 and you buy your home for $380, inshallah in 2026, that home is going to be appreciating in value around 400, right? If not 450. So again, this is all predictions. Allah knows best what can happen. But based on how the economy is working, what experts predict, this is where we're heading towards, right? And people always ask, oh, what if the market crashes? Well, don't sell, right? If the market crashes, no one's telling you to sell at that point. Stay home. Tips for buyers. This is my favorite. Take the time to get pre-approved and figure out your finances. This is very, very important because I know as buyers, we get very excited. We've been thinking about buying a home, and then one day finally we tell our spouse, our husband and wife, hey, I think today is the day. We're gonna call our realtor and we want to buy a home, right? And the first thing that you do is you call him like, I want to go see homes this weekend, right? As exciting as it is, the first step is kind of boring, which is you got to speak to those guys, right? And then the fun guy comes in. I'm joking, they're fun as well. I like talking to them before bed. Sometimes on nights when I don't feel sleepy, I call him and then, I'm joking. He's a nice guy. All right, so, but the first point is take the time to get pre-approved and figure out your finances. That is very important because if you don't know what you want your monthly payments to be, if you don't know what your max budget is, you're gonna be going out running around. 5 weeks, 6 weeks is gonna go by, nothing's gonna happen, you're gonna lose motivation and then you're like, forget this is too hard, right? So you wanna have everything prepared. You want to do your due diligence so that when you go out, you're actually prepared and you're actually putting in offers that make sense and that give you the highest chance to win. Now, crafting a winning offer, we can talk about that more in detail when that time comes. But in general, it's not just about the price. You know, sometimes you think about, oh, we're going to offer 25, 30,000 above the asking price. It's not just that. There's other things that fall into play, such as financing type, down payment. And one thing I'll mention is I have never had a seller reject our offer because the buyer was using Islamic financing, right? I've never had that happen to me. The 2 times I bought homes for myself personally, it's never happened. The listing agent will call and say, hey, I've never heard of this lender. Can you help me out with this? Hey, it's just a conventional finance. It's just a conventional banker. I've worked with them numerous times. You won't have a problem. So if that is a concern in your mind that if I'm going to work with them, is my offer going to get rejected? Never happened to me. Trust me, it's not going to happen, inshallah, right? Security deposit, settlement date, these are all things that fall into the offer, inspection contingency, appraisal contingency, transfer taxes. So these are all the different things that you have leverage and you can negotiate with the seller when you're crafting your offer. So it's more than just saying, hey, you have your home on the market for 350, we're going to offer you 380, right? There's a bunch of other things that fall into play, and that's where, inshallah, we can kind of help come in and help you. Tips for sellers, you know, is it a good time to sell? It's a great time to sell, but the challenge is where you're going to go next, right? So it really depends. If you're looking to downsize, then move to Florida, get out of here, right? Why are you going to pay taxes that are so high? Go to Florida, right? But if you don't want to go to Florida, you want to stay in the great state of New Jersey, then downsizing is great because you're selling your home for such a good price. All the money you're getting from your home, you can literally transfer it and buy cash a smaller home if you want, or you can use financing, right? But the biggest question that people have is, if I'm selling my home, where do I go next? Because the housing market is so crazy. Am I going to find a home? What if I sell my home and then I don't have a home? There's ways around it, and the way we do it is we have one or two options. Either number one is we tell the buyer that Mr. and Mrs. Buyer, you have to be flexible enough for the seller to find the right home, right? So you have to give us enough time for us to find the right home, and until we don't find the right home, until we do not secure suitable housing, we will not sell. We're not going to go to settlement. That's number one. Number two is we can do a leaseback agreement where we have settlement, and then the new owners of your property let you live in your previous property for 90 days, 120 days, whatever the case, right? Allowing you to now go and find your property. But the point is, if you sell your home, you're not gonna. If you are thinking of selling your home, you're not going to be in a position where now you're homeless, right? We're not going to let that happen, inshallah. And that is the end. If you have any questions, then inshallah, we're going to open up the floor for that. Does anyone have any questions?
Anybody have any questions?
General?
Yeah.
General. So where is money? Where does guidance presidential get the money from? What's that for? Because the thing is this, from my knowledge, if we in guidance presidential go into a contract, that's not a problem. But as far as where is guidance presidential getting their money?
Very good question. And it's a very common question that we get. So we have investors. We work with Freddie Mac and Fannie Mae. They are they are government-backed entities, and they're not a bank. They're not giving us a loan or anything like that. Their job, they were created primarily to provide liquidity for home financing companies such as themselves. So that's how we get our funds. Sami, do you want to add anything?
Hello, everybody. Yeah, sure. I actually wanted to go back to the first brother's question first. Where do we get our funds? What Akib has mentioned is our investors who actually buys our Musharaka contract once we complete the transaction with you. But the first part is we have our own funds. Guidance Residential, just to give you a background, Guidance Residential is the only Islamic owned wholly subsidiary of a Islamic investment company. It's a family-owned company. We've been around about 50 years or more. The second generation is actually maintaining the company. So our parent company is known as Guidance Capital. We are in, like Akib talked about in his presentation, we are globally. We do equity investments and sort of like a equity investment fund. So we have our own funds. We use our funds to finance your property. We have a Musharaka agreement with you, and then we go to investors who would purchase the stake on our Musharaka contract. So that's how we actually liquidate our funds, and then we finance someone else. And then someone else can question. Yes.
How do you calculate and
Okay. We do not follow Murabaha program because Murabaha program, according to Justice Mufti Taqi Usmani, is not permissible and it's not Sharia compliant here in the Northeast, North America. So we do not follow Murabaha. We never followed Murabaha. Just to give you a background, back in 1997, when Guidance Residential wanted to start a financing solution for the Muslims to eradicate riba, remember back in 1997, there were banks existed who were offering sort of Islamic finance, being a bank, because it was easy. But the founder, Dr. Muhammad Hamor, he is by profession, he's an economist and he's attending professor at Columbia University. So because he's an economist by profession, he understood that banking system is problematic for a Muslim and let alone doing a Sharia compliant home financing. So Guidance chose not to be a bank. We chose to remain a private investment company. So that's how we chose to do with the 7 of the world-renowned scholars led by Mufti Taqi Usmani. He decided that one of the Musharaka contract known as Shirakatul Milk is the right and permissible contract to use to finance a home, where we become a co-owner with you when you plan on purchasing a home. So we don't use Murabaha because Murabaha is not permissible. There are some other bank-owned entities are out there right now. You will find that they were using Murabaha at one point, and now they realize that probably Musharaka is the right contract to use, but still no other bank, no bank entity here in USA can claim that they are a co-owner with you because the federal government highly regulates the banking system in USA. So because of that, any banking institutions wants to become a co-owner with a bank, with a homeowner, they are forbidden to become a homeowner, to be a co-owner. So because of that, no bank-owned entity or a subsidy of a bank can ever be a co-owner with a homeowner. Guidance is the only non-bank entity is able to create this co-ownership program with the structuring of a LLC. We create an LLC, and that LLC becomes a co-owner with you. And that's how we are able to do this program as Sharia compliant. Yes.
Follow-up question. All right, so with that contract, is anybody else a part of it other than Guidance? And let's just say me.
No. So the contract that we signed with you, so the contract that we signed with you is between you and us, Guidance Residential. So we created a LLC structure. When we sell our contract to our investor is just a silent investor, has no rights to change the agreement, will not become a third partner with you.
Okay.
It's an investor into that stake.
Also, so if the house is, let's just say the house is 500,000. You don't purchase it, let's just, like he said, I got 500, I got 100,000, right? You purchase the house at a higher price, and then I put 100,000 down, and then throughout time, I become owner of the house. That's simply how it goes.
That's exactly how it goes. So you buy it, you find a house, of course, through him, the expert for 500,000. You put 100,000 down. That's about 20%. So you start your co-ownership agreement with us with 80-20. We give you a schedule how you are going to buy our 80% over, let's say 30 years. It's 350 payments, and each payment is going to demonstrate how much of your share you're purchasing each month and how much of a profit you're paying us. Any other questions? Yes, bro.
Good, good about what he was mentioning. He mentioned that Morama, however, have the Shara opposite group. I bought the house once for $100,000. How much you can sell it for?
Sure, very good. So just to clarify again, how does Musharaka works, how Murabaha works, and Ijara? I'll just give you a very quick answer and very simple. Murabaha, Islamic contract, according to the Islamic economics, there are multiple different kind of Islamic contracts, right? We all know Salam, Sukuk, Istisna, Musharaka, Ijara, Murabaha, and so on. Whenever you want to finance something that's asset-based, you can use Ijara, Murabaha, Musharaka, and Musharaka Ijara. There are different types of contracts. Now, Akib talked about Murabaha, which is buy and sell. I can buy this microphone for $100 and sell it for $150. That's my profit. That's Murabaha. But Murabaha program is not permissible because one cannot buy it. Murabaha program was used here in USA by a bank-owned entity. And that bank-owned entity claimed that Murabaha program is permissible because we are buying the house for you, 500,000, and sell it to you for 800,000, and then you owe us 800,000. The problem is the Sharia nature of Murabaha is that once the Murabaha contract is consummated by the bank and the consumer, the bank has to wait for 30 years for the consumer to pay back. And also, the bank has to purchase the property. The company who was using and who's still doing Murabaha program, they're a bank, they can never buy a property and there's no closing cost. There has to be 2 closing costs. And you cannot sell to an investor if you do not own. I cannot sell this microphone to you if I don't own it. So Murabaha program cannot be used here. Ijaratul Waqtina cannot be used because you have to own the property to lease. If I'm not a landlord of this building, I cannot lease this to this masjid because I'm not the landlord. So banks do not own the property, how they can lease it to you. So Ijaratul Waqtina doesn't work. The only way Musharaka works, and the way Musharaka works, I believe to give you a simple and simplified answer, I'll give you a very short story. Akib and I, we are brothers, okay? Let's just pretend that we are 2 brothers. And let's pretend our parents have given us a property which we have inherited, okay? Now, I'm much older than you. So I'm telling him that, you're single, why don't you sell your 50% share to me? We both own the house together, right? So we decide that the house price is, let's say, $100,000. Now, I need to give him $50,000 so I can have the whole house for myself. And I buy the house from him. I have to have an agreement with him that give me about 5 years and I'll pay you off slowly. But each month that I'm paying him off, I haven't paid him off fully, but I'm using the entire house where I still don't own the whole house. He has a hak on his ownership of his equity, which I am using and enjoying, which he's not. So for that, I have to give him a rent or some sort of a benefit for him because he owns it. That's called shirakat al-milk, meaning that there is an agreement, there is an ending period that I'm going to buy him out at one time, and I'm not paying him rent the same amount every single month, because the rent I'm gonna make it less and less every month because I'm also buying his share. So that means that declining co-ownership in a translation of Shirakatul Milk, it means that one owner is buying the share from the other owner over a period of time, and while buying the share, I'm paying him a rent for the portion that I do not yet own, that belongs to him. But it's going to end at one point. That's called Shirakatul Milk. That's the contract that we form. Sisters has some questions there. Yes, but
My son needs an agent.
For example,
okay. Yeah. Okay, brother. So
I was in a house, 128,000. Okay, I want to pay down payment 200. I will finance 100. Okay, 15 years. Can I do how that calculation?
sure. Okay, so the brother's question is, how does the calculation works? So here is an example. This one is based on $100,000 for 15 years, and let's say our profit rate is 2.25%. Okay, it's a great profit rate, by the way, compared to right now. And here's how it's gonna look like. The first month, you are starting with the beginning balance of 100,000. Your scheduled payment is 655. That remains to be the same every single month going forward. But what happens is, the column it says acquisition is $467 is the portion that's going towards your share that you're buying, increasing your share. And we are charging you $187 as a profit, or you can call it a rent or utilization fee. And then you see that that month after you make the payment, your share increases from 20 to 20.37%. Now the second month, now you have to buy from us 99,532. You make the second payment of 655, and you can see that your acquisition amount increased to 468, and our profit has decreased 186 because we own less share and your share increases. So this is an example of 15 years. If you maintain this minimum payment, you will end up paying us 17,915. But if you end up paying us, let's say after 10 payments, all we made, those 10 payments of profit, 187, 186, 185, you get the point. We are not going to take the entire $17,000 profit. We are only going to make whatever the months you paid us the profit. That's all the profit we made, and that's it. You're welcome.
What about first-time home buyers?
Yes, very good question. So the city and town have different kind of first-time home buying programs, and they give you those grants. Certain grant programs requires you to go with their chosen lenders, and that's it. There is no question about it. But there are some programs where you are allowed to do any other financing. Then you can come to us. You can contact Akib. You can contact our #1 real estate agent, and they will help you out, inshallah. Yes, brother. Okay, very good question. If the closing cost negotiable, because guidance is not a bank, and guidance is not interested in making a percentage of whatever your finances are, we have a flat fee of $1,195 that hasn't been changed since I've been with this company. So $1,195. Out of that, we have underwriting fee, processing fee, administrative fee, and credit fee. All together, it comes up to $1,195. And sometimes we even run a promotion that we give few $100 discounts. So our flat fee is $1,195. Everything else, part of your closing cost is your title fee, title insurance. You're in New Jersey, so you only thing you have to worry about is the title fees, your attorney fees, home inspection, appraisal. That's about it. So that depends on whatever property you're buying. If you're buying in Pennsylvania, that is a different story. You do have some mortgage tax involved. Any other questions? Yes.
About catching up on the.
Yes. So the brother question is cashing out on equity. Yes. If you own a home, and the wonderful example that he gave after COVID-19, what happened? The home has appreciated values. Yes. If you want to tap into your equity, you can definitely do that. Our program offers. We have 30-year, 20-year, 15-year. If it's a single family home, you should be able to take out up to 80% of your equity. Obviously, after you take out that 80%, if you have an existing mortgage, you're going to have to pay from that. And then the remainder of the balance is yours after paying the closing cost. Yeah. Any other questions? Yes.
You get your money from your investors, right?
No, we have our own funds.
Okay.
Then we sell our share to our investors. Now, let me just give you an understanding that how big Guidance is. Guidance Capital is about $7 billion industry. It's a company, family-owned, two-family owned, right? Here, Guidance, last year we financed $1.3 billion. Back in 1997, when Guidance starting this program had to spend $25 million just to get this program started by paying 18 different law firms and 7 of the world-renowned scholars based in Bahrain from IOFI organization. So a company who started this program just to get started spent $25 million, and for the first 8-9 years, the owners did not make any profit. Actually, they were pumping in money. So just to give you an idea that on a monthly basis, we do about $150 to $200 million business that we do. And then we sell it to the investors, we get our money back, and then we finance again, we sell to our investors, we liquidate our funds, we continuously do that. So it takes a lot of undertaking. That's why there's no other Muslim-owned organization is able to take such a big undertaking. That's why you will see a lot of banks are deciding to do a Sharia account financing. It's like the left hand is doing riba-based activity, and while the right hand is trying to do a halal financing, only because the left hand, the bank has the money where the money is printed by the government, and then it comes, that is another topic I would love to talk about. Everybody will be here until 10, 11 o'clock. How the money flows in this country, in the banking system. Banks, Sheikh Sultan Lorenzo told me once that banks are problematic for Muslims because banks, by definition, they have to lend money. That's the way to exist, and that's how they are supposed to operate. Print money and create a different kind of a loan programs and sell money for more money. So Guidance is the only company who actually had the courage to spend the money, and till now, we are doing this because our goal has been to help the community not to get into riba. That was the goal of the founder, and they just did not decide one day. They were already doing great in Middle East, and because Guidance has been so successful here, headquartered in the USA, we have influenced the Middle East. There's a bank called Darul Tamlik in Saudi Arabia was invited. Guidance was invited to help them form the same program. Guidance also has successfully do the program in Morocco, the same program. We have influenced in Malaysia as well. So Guidance is a global company. is only dealing with Sharia compliant programs and investments.
There is a guarantee that there is no interest, no riba involved in your taxes, like where you borrow your money from, or like you're lending your money to.
No, if you become our customer, you will see all the documents. The agreement that we sign with you is based on a Sharaka contract, the Sharaka token. You are going to see it's going to clearly say that we are buying the house together, we are creating an LLC structure as your co-owner, and your obligation is to buy our share over a period of time, and here's the payment plan. And you have 100% right to 100% right access to the house. We don't, and because of that, you're going to pay us a profit for the portion that we're gonna keep owning each month. And then there are some governmental documents. The governmental documents are there because guidance is financing a home. Like I said before, the mortgage industry is a heavily regulated industry. Because of that, the federal government says that any private company is financing a home more than 4 in a year, and guidance does hundreds, thousands. So because of that, we have to abide by certain rules and regulations. So the federal government says, how much is your financing charge? Oh, we think that's an interest. Whatever you call profit, we are not Muslim. We understand that's interest. So they want us to, fill out some of the governmental forms. The governmental forms that we have to fill out because we have to finance your home. We do it our way, but we have to tell them that here it is, however you want to understand it. But we have our understanding between us. I'm sorry, I didn't hear it clearly.
We got a late fee. Late fee.
Yes.
Because when I was studying the shit, explained that the late fee is way back as well.
Yeah, so the 7 of the world-renowned scholars who actually advised us to, they actually helped us from the program. They said that if there is a late payment from the customer and guidance has to remind the customer and there is an administrative cost the guidance has, guidance can charge the customer only the administrative cost, nothing to profit out of, and it can never exceed $50. So guidance's administrative cost has been always less than $50. It's $40 or something, and it never compounds. Conventional banks will charge you 5% of the monthly payment, late fee. Second month you're late, they will add the previous total and add the current month, and they will charge 5% on top of that. That's the compound interest, right? So that's
So basically, if I come to you, if you guys, I work for the company, I come from the house is in New York, I drive from Pennsylvania to New York, not New York, which is free, so you gotta pay. But the cost when you come from Pennsylvania to New York, you got the customer.
right. I'm glad.
I just wanted to make sure.
Sure.
I mean, I was, because it's a lot of people who say I've been in a lot of different seminars, but this is different. The bottom line is you have your own funding. Oh, that's number one. Number two, the contract in between two parts. Whether or not you sell your equity or not, it doesn't matter. Because at the end of the day, you're allowed to sell what you own. And as long as, like you said, with the late fee, it's the administrative fees.
Right. And also, the other thing at the end to add, we are also not a bank. We are also not involved in a riba. We are not pretending to do Islamic finance while we are also involved in a riba. So that's also. Yes. No, sure, please. If you maintain 180 payment minimum payment, you don't have to though. Yes.
This is the profit for guidance, yes?
Yes, yes.
Very good. He could be with the bank.
Sure.
I wouldn't put, I wouldn't
If I get rid of riba and if I am getting
Yeah.
nothing
So
at the same time,
great. You're happy. So
then why did I?
you put your number, right? So you can contact
Then I just give
Akib.
that house away.
Akib, you have his number. So
Give that house away. I'm paying more
Yes.
right now than I was
Oh,
paying
okay.
for this.
Sisters have questions. So yes,
But
sister.
that's fine.
I'll come here. So
That's the riba. No problem.
no, sister. So the question is, what's the minimum requirement? The minimum requirement is 5%, even 3%. So let me start with the 3% requirement, how you can qualify. Let's say that you live in a hard median income area that's designated by the government, and your income happens to be 80% or less than the hard median area. If that's the case, you can put 3% down, and you can also get about 6% closing cost sales concession if the seller wants to pay your closing costs. So yes, it's very easy to own a home with 3% down. Now, let's say you don't want to, you probably have, mashallah, good income, and you can put 5% down for a single family home. You can do that. If you fall into that previous program, hard median income, you can also buy multifamily properties up to 40 units with a minimum 5% down. But if you do not have, if you do not fall into that program, you can do multifamily 20% down. Two family, you can put 15% down. So for a single family, if you're buying 5% minimum. Yeah, so you have to qualify with your income. So we look into your credit, we look into your income, last 2 years employment history, and your income. We like to see a graph that looks, you have a stable income going on for last 2 years, or is increasing. If the income is declining, it's kind of a worrisome for us because we don't know if you will be able to maintain the payment and the obligation. Yeah, so the PMI is something that if you put less than 5% down. So if you do less than 5% down, you have two options. One, pay guidance a little bit more profit because it's much riskier for us, or pay the same amount of less profit rate, and you can pay a PMI payment also. If you're buying your house for the first time and it's a purpose of primary usage, you're gonna say on the application that you're buying it to live primary, right? But if your ultimate goal is to buy for investment, my humble opinion, I recommend you do the right thing from the beginning. That it's going to be an investment property. However, people's life change. After 6 months, things happen, and you change your mind. There's nothing wrong with that. You can go ahead and buy another house, and you give the previous house for rent. That's okay. So what happens is, if you already purchased the house as a primary and then you lived there for 6 months and then you moved on, now it's an investment property, you don't have to refinance again to make it investment. No, because that's the 6 month gives you the right to just keep it. But however, you're gonna have to change your insurance. God forbid something happens, the insurance company comes in and they will not cover anything at all. So that's something you definitely should change. Sure. So what we do, we actually finance the property and then we just go ahead and sell our share to our investor. So we recoup our money. So whatever, who are the investors? Freddie Mac and Fannie Mae. They are actually, yeah, those are the two investors we have who actually purchased our Musharaka group, who actually agreed to purchase it back in 2000. When we started our program on 2004. You have a question? You cannot buy because we already have an LLC. So we are actually structuring the LLC co-ownership through an LLC. You're gonna have to buy it under your name, personal name. Then later on, if you want to switch it to LLC, don't just do a regular LLC. You can do something called it's called asset protection LLC, which is known as series LLCs. You need to speak to an attorney who's actually going to help you structure that. It's called series LLC, but it's under asset protection. So it's like a living will kind of a situation. So that's how you can do that. But if you do the other way, like just completely signing off, deeding off to a regular LLC, standalone LLC, that's actually violating the agreement, and that's not. I don't suggest you do that. You do the other one. Transfer to a series LLC, which is under your living trust. So LLC under trust. So if you speak to an attorney, help me structure LLC under trust. So basically, you're going to have a main LLC. That LLC is going to have a sub LLC, child LLC. And that LLC is going to be under a trust, living trust. And then you can, so those are known as trust LLC. So you can definitely buy under your name first and move it to trust LLC. Anytime you refinance, bring it back to your name again. Refinance, move it back again. 5% for primary, and if you're not buying investment property, single family 20%, multi-unit 25%. Those are for investment. Yeah, and a single also 5% as well. Yes.
You said earlier that the lowest down payment that we can give is 3%.
You can do it as low as 3%, but you have to qualify. You have to be in that high median income zone. And if your income is 80% or less in the high median income zone, then you can qualify.
So my question was, if you're paying less than 20% on a conventional or like a PMI, how does that?
PMI has to be there because our investor would not purchase our construct contract if there is insurance. All they care their investment. So they need to have that assurance. So you have to buy it. So we use only one company. It's called NGIC. Magic, they are the one that actually
How is the PMI?
in terms of Sharia aspect, scholars have said that PMI is actually covering the investor. So it's for the investor's purpose. So yeah, the scholars are fine. We actually have the fatwa on our white paper and also on our site from the scholars who actually signed off on it. Sorry? It actually goes away as soon as you have 20% equity. And 20% equity could be any time. You know, the way the properties are appreciating, it could be any day. The moment you know that you have a 20% equity, all you have to do is do an independent appraisal, spend about $400, send it to the PMI company, and that's it. And they will start.
So we're going to day trade it right now because how volatile it is.
Yes,
sure. So I would advise everyone to put even a nominal amount of money on a couple of read up on projects. Just $100.
So,
20 years from now.
multifamily, if you buy for primary, 20%.
20,000, like, so whatever.
All right, so I think
And then take even a little.
no one has any more questions. Thank you so much, Jazakallah khair, for welcoming us. Wish you all the best. Thank you, Islam.
It's just, I don't know, that's my strategy right now. And then when you make enough, put stuff in the S&P 500, because that is historically decade over decade brought me back something that's been 4 to 7%. You know, just like don't look at shave off the game. If you had like $1 million marked in the S&P, you could live off it. Why do like 40 or 50,000? Well, maybe not live off it. It's a good something. You know? To get your nut, one nut for the month like a little squirrel. It should be working right. That's the hard part. You know? So I think that's my way out of the school. And that's the way it's out.
What do you think about this 401k technology?
Well, it all depends. It's the same thing as you investing money. So which part of it? Matching part?
Yeah.
It's the company you're working for. Matching.
Right.
That's an agreement you enter with them.
But it depends, like, like basically they are investing that money somewhere.
They're investing. So the matching part we're good with them. The other part is where they investing.
Right.
That's the issue. Sometimes usually it's like a gigantic aggregate fund, right? And you usually tend to have some leeway in where exactly it's funded. The problem is they use short options. It'll be like fund A, fund B, fund C, fund D, fund E. And they just tell you, A is most risky, highest reward. This one is lowest reward, lowest risk. They don't actually tell you what companies make up that fund. And sometimes it might be those funds change how many what companies are in. So that's the tough one. You know, maybe I'm self-employed, so I don't have any of that. I cashed out my retirement, and kind of, I guess, I cashed it out, and that's very people just to survive at a certain phase. God, it's a scary set of years. And then, you know, clawed my way back a little bit now. So now I'm trying to invest it on my own. So, yeah.
What do you do?
What do? So I had a marketing agency. Shut that down, and now I consult sometimes, but mainly with everybody. That's my number one thing right now. So I'm the chief mission officer there. I still, you know, like financially, we're two different entities. So I send them an invoice, so I'm not employed by them like a traditional employee. Right. And then, you know, I do some side gigs here and there. I think for the future, I'm looking for my next step is I'd love to build a physical product. I'd love to have a physical product. It's an information space. You know, my wife and I started courses before, homeschooling, stuff like that. I really want to build a house. Touching something that'd be exciting. That's basically